Good evening and welcome to our cryptocurrency news segment. BlackRock close to filing for Bitcoin ETF application. Source: BlackRock, the world's biggest asset manager, is reportedly planning to file an application for a Bitcoin ETF. The move could potentially change the landscape of cryptocurrency investment. The world's largest asset manager, BlackRock, is gearing up to file an application for a Bitcoin ETF. A person familiar with the matter has stated that BlackRock will be using Coinbase custody for the ETF and Coinbase's spot market data for pricing. Coinbase is one of the world's largest cryptocurrency exchanges, and it's no stranger to institutional investors. Coinbase will be providing BlackRock with its custody services for the ETF, which means it will hold the Bitcoin on behalf of the asset manager. This means that BlackRock will not have to worry about securing their own Bitcoin and will be able to rely on Coinbase to keep their cryptocurrency safe. Coinbase will provide BlackRock with spot market data for pricing the ETF. This means that the ETF's price will be based on the current market price of Bitcoin. BlackRock has been working with Coinbase since last year to make cryptocurrency directly available to institutional investors. This is a huge development for the crypto industry. BlackRock is a major player in the investment world, and the fact that they are filing for a Bitcoin ETF shows that they are taking cryptocurrency seriously. This opens up a whole new world of investment opportunities for institutional investors who were previously unable to invest in Bitcoin. It's worth mentioning that it's not yet clear whether the ETF will be a spot or futures ETF. However, it's worth noting that the Securities and Exchange Commission, which oversees ETFs in the US, has rejected every application for a spot Bitcoin ETF, though it has approved several Bitcoin futures ETFs for trading. The SEC has been hesitant to approve any spot Bitcoin ETFs, citing concerns about market manipulation and volatility. However, with BlackRock backing this application, it's possible that the SEC may be more willing to approve it. BlackRock is a major player in the investment world, and this move will give investors more confidence in cryptocurrency as an asset class. We could see more institutional investors dipping their toes into crypto as a result of this move. It's clear that this move has the potential to change the crypto landscape. Google says its next AI, Gemini, will be more powerful than ChatGPT. Google's artificial intelligence subsidiary, DeepMind, is developing a new AI system that will be more capable than OpenAI's ChatGPT. The CEO of DeepMind, Demi Hassabis, said that the upcoming Gemini system is a large language model that utilizes text similar to ChatGPT but will be equipped with new capabilities such as planning or problem solving. Gemini is still months away from officially launching and will cost tens or hundreds of millions of dollars to develop, according to Hassabis. He has also stressed the need for further research into the potential risks of more capable AI systems. The system will be based on technology and techniques used in AlphaGo, an early AI system developed by DeepMind in 2016. Hassabis said that at a high level, Gemini will combine some of the strengths of AlphaGo type systems with the amazing language capabilities of the large models. There will be new innovations, which he called pretty interesting. This news comes shortly after Google released its own AI chatbot Bard, which rivals OpenAI's ChatGPT. However, the system faced internal skepticism from former Google employees over concerns for society. Also, Bard has been blocked from launching within the European Union due to regulators in Ireland accusing the company of failing to file the necessary paperwork. Arthur Hayes says the Chinese trader will drive crypto's next bull market. Arthur Hayes, the co-founder and former CEO of crypto exchange BitMEX, believes the next crypto market rally will be shaped by Chinese traders. In his latest blog post, Hayes highlights that the US Securities and Exchange Commission's current crackdown on crypto might be a negative trigger. The crypto market is likely to freak out and crater even further due to this. However, according to Hayes, it is not the US but China that could hold the baton as crypto heads into the next bull market. Just as in 2015 when the price of Bitcoin tripled due to Chinese interest sparked by the sudden devaluation of the USD, Hayes sees a similar pattern emerging. He predicts that this could happen again as the world's second-largest economy embarks on an insane credit issuance spree. Hayes believes that the trigger will be a slowdown in China's economy and the subsequent money-printing spree that will weaken the yuan and see massive inflows into crypto. The weakening of the yuan, and the focused approach to attracting crypto and blockchain in Hong Kong are going to be key factors. It is a trajectory that best suits HODLER's Binance United Arab Emirates as focal point for future operations. The UAE is becoming a major focus for Binance, after a series of enforcement actions in the United States against the crypto exchange. Speaking to Cointelegraph, Binance Dubai General Manager, Alex Chahadi, said the UAE is a prime destination for crypto businesses seeking a clear path forward. Binance identified that the senior leadership of the UAE wanted to establish the region as a focal point for Web3. They're trying to diversify away from fossil fuels and they see crypto as a great driver for doing so. According to Chahadi, clear crypto regulations in the UAE make the region attractive to exchanges like Binance, which is currently wrestling with legal disputes from regulators in the US, including the Securities and Exchange Commission and the Commodities Futures Trading Commission. Chahadi noted the UAE's Virtual Assets Regulatory Authority, VARA, as a key driving force behind the surge of crypto-related interest in the region. There's a clear framework for people and businesses to engage with, whereas you're just not seeing as much of that elsewhere, he said. Merkle Science CEO Muriganka Patanaik also praised the regulatory landscape in the UAE, noting that VARA, as the world's first virtual asset-specific regulator, provides very detailed compliance guidelines for firms working under its purview. There's more interaction with the private sector and regulators because it's a smaller, early-stage ecosystem, Patanaik told Cointelegraph. It's also easier to hire teams in the UAE or just build out a team of 100 people, all of whom don't come from the region. On February 7, VARA released its full market product regulations, which include 4 compulsory, activity-specific rulebooks that lay down the rules for virtual asset service providers operating in Dubai. Binance received a preparatory minimal viable product license from VARA in September 2021. Chahadi believes that the influx of young people moving to the UAE could see the region more rapidly adopt crypto than other digital asset hubs. The two key drivers are that lots of expatriates are moving here from Europe and Asia, and the overall demographic is younger as well, and we know that younger people have a more favorable mindset when it comes to virtual assets, he said. You don't see that so much in other crypto hubs. In conclusion, Binance Dubai General Manager Alex Chahadi believes that the UAE has strong potential to become the world's next major crypto hub. The clear crypto regulations in the UAE make the region attractive to exchanges like Binance, which is currently fighting legal battles with regulators in the US. VARA has also been identified as a key driving force behind the surge of crypto-related interest in the region, with its detailed compliance guidelines and interaction with the private sector. Finally, the influx of young people moving to the UAE could see the region more rapidly adopt crypto than other digital asset hubs.